Hey everyone, welcome back to the channel. So in today's video, I wanted to talk a little bit about Avepoint and talk about why I think that they are currently positioned to be one of the bigger emerging growth companies at the moment. So let's take a look at Avepoint right here. I currently own about 2,600 shares of Avepoint at an average cost of $11.38. And I just want to talk a little bit about why I think Avepoint is a really good buy right now. I'm going to review their financial statements as well as talk about some insider trading that has produced some relatively good news about Avepoint's executive leadership and changes in their ownership. And then I'm also going to talk about some of the potential upside for Avepoint compared to their competitors, as well as some price targets from analysts that have ranked Avepoint in terms of their potential for growing as a business. So the first thing I'm going to do here is go over to their price target analysis. So I'm just going to go to market beat right here, and you can pretty much look up price targets, predictions, or the financial statements, or pretty much just any kind of news that you want about any business that you're researching just by going to MarketBeat, and I'm going to be doing that for Avepoint. So you can see right now that the current price for Avepoint is $9.90, and the overall rating consensus from analysts is that Avepoint is currently a buy, and this is only based on 6 ratings. And something that's good about seeing that a business has a low amount of analyst coverage is that it shows that the business is relatively new. And for a business like Avepoint that has so much potential, as I'm going to get into in this video, it's good to see that it's a relatively undiscovered company, because as a shareholder, you want to buy low and sell high. And as Avepoint gets more popularity and more people have their eyes on Avepoint, that's only going to grow the share price even more as more and more people start to buy it. Basic laws of supply and demand. So you can see right here that the average price target for Avepoint based on the coverage from the 6 analysts is $14.33, with the low price target being $11.45, the average price target being $14.33, and the high price target being $17. All 3 of these price targets, the high price target, the average, and the low, are all higher than the current share price for Avepoint. So no matter which price target is correct, if any, Avepoint is currently positioned at its current share price for being a great return on investment for anybody that pretty much buys into it at these current levels. And that's probably why it's rated such a buy by analysts. And if I scroll down here, I can actually see who was actually covering Avepoint and who produced these target ratings. So you can see that Evercore, Goldman Sachs with the high $17 price target, and then Citigroup, William Blair, Northland Securities, and Cohen. And if you compare Avepoint to a lot of their competitors, what you'll find is that the upside for Avepoint is way higher than the upside for their competitors and the price targets that some analysts have placed on their competitors. Avepoint's competitors right now, if you went to the competitors section for MarketBeat, which is a little out of scope for this video, so I won't get too much in detail into that, but what I saw from reviewing the competitors section is that most businesses that Avepoint is competing against in this sector have an upside of about 1 to 10%, whereas Avepoint has an upside of basically around 50%, so that's really good. The second thing I'm going to do is review their SEC filings, because some really interesting news came out about Avepoint's different changes in ownership, primarily from their CEO. And so the way I'm going to do this is, if you just go on Google and look up Avepoint SEC filings, this page will pop up, and the 2 forms that I'm going to be reviewing here are the statement of changes in beneficial ownership of securities, as well as the 10Q report, the general form for quarterly reports. So first one I'm going to be looking at is the changes in securities. And so this is a form that higher ups like the CEO of Avepoint have to fill out when they change their position in the company. And you can see right here, these would be the 4 people who would have to basically change or report their changes in equity when it changes. So that would be the director, officers, some other specific people, and also 10% owners. And the 10% owner part is interesting because Warren Buffett has actually came out and said in the past that this is one of the reasons why he, if he can, tries to avoid owning more than 9% of a business. That way he can, buy and sell his shares freely without having to go through the trouble of reporting his changes in equity in the businesses that he invests in. But as a CEO of a business, they usually do have to do that. So you can see right here that on this form, on August 17th, 2021, the CEO of Avepoint acquired an extra 100,000 shares for an average price of $9.36 per share. So about $1 million of shares were bought by the CEO on August 17th. And this can be a really good sign for shareholders like myself to see because as a shareholder, I want to know that my interests are aligned with the interests of the leaders and the CEOs and the CFOs of the business. So seeing that the CEO of the business bought an extra 100,000 shares is a great sign because it shows that they obviously are insiders, so they know more than I do. And it also shows that they believe that there is upside potential for Avepoint from its current share price of around $9, which is great. You can also see right here how these shares are being acquired. So the CEO's spouse currently owns about 17 million shares, I believe, amount of securities beneficially owned, so that would be 17 million shares. And you can see that the CEO's LLC, GRAT, they also own this number of shares, and then directly the CEO of Avepoint owns about 1 to 2 million shares. So that's really good. The second thing that I want to review is Avepoint's annual, or not annual report, but quarterly report. And the first thing that I wanted to go into before diving into the numbers is just based on reviewing this entire document, what I found was some things that interested me. So you can see right here it says emerging growth company. And the company is an emerging growth company as defined in Section 2A of the Securities Act. And this means that they can take advantage of certain exemptions from various reporting requirements. And this was interesting to me because when I was reading their financial statements, it looked a little bit different than what I was used to reading for other businesses. And I suppose that because they are an emerging growth company, they don't necessarily have to report their financials in the same way as other businesses that aren't classified as emerging growth companies or are potentially more established. So something else that I wanted to review right here is that it says the company generated non-operating income in the form of interest income from proceeds derived from the initial public offering. And the initial public offering was the merger that Avepoint announced in November of 2020 with Apex Technology and then closed in July of 2021. And so if we scroll up a little bit and look at their financial statements, we can see right here, this is their balance sheet. This is the 10Q form right here, and then if you scroll down a little bit, you can see their balance sheet. And so I just want to review this a little bit because it's really important to try to get a general snapshot of the business's current financial position as a shareholder. So their current cash equivalents have actually increased from December 31st of 2020 to June 30th of 2021. And that's a great sign because having a lot of cash as a business is important for weathering the storm for economic or business downturns in the future. And it is also a really good opportunity to be able to use that money to reinvest into opportunities that otherwise the business wouldn't have been able to capitalize on if they didn't have the cash readily available to them. Something else that I really like to see is that their accounts payable under their current liabilities and accrued expenses has increased from December 31st of 2020 to June 30th of 2021 from around $4 million to $10 million. And this is another great sign because this means that their business is essentially being financed from outside resources. So this means that they get to save money on their cash at the moment, and they can use that as an opportunity to reinvest while their business is growing from outside financing efforts and investing. You can see that their total assets have actually decreased from December 31st to halfway through the year of 2021, but their total liabilities have decreased even more so from 95 to 84. So although their assets have decreased, their liabilities have decreased even more so, which has shown that their total equity has actually increased. And I don't know how accurate these numbers are because this is an unaudited balance sheet, as you can see right here. Like some of these documents say unaudited, and that's mainly, I'm guessing, because they're an emerging growth company, like I said before, and they don't have to adhere to the same mandatory accounting standards as other businesses that are potentially a little bit bigger than they are. And the last thing that I wanted to talk about is why I think that after all this, that Avepoint is positioned to be one of the stronger growth companies out there right now. And so, uh, as you all potentially know, Avepoint provides SaaS solutions, software as a service solutions, for Microsoft, which is the second biggest company in the world. And something that AvePoint has achieved by working with Microsoft for the past 20 years, since around 2000, 2001, is that they are now a Microsoft Gold partner. And so what that is you can essentially see right here, Gold competency is the highest certification and represents an even higher level of expertise and a proven and specialized skill set in a particular technology or service area. Gold partners are recognized for offering innovative business solutions. They are among the top 1% of Microsoft partners worldwide. And if I scroll down a little bit here and look up the top 100 Microsoft partners in the world, and I scroll down a little bit here, right here, you can actually see that Avepoint is one of the top 100 partners for Microsoft in the entire world, and they are also a Microsoft certified Microsoft Gold partner. They provide solutions for Microsoft and Salesforce, which is another reason why I think that they're positioned to grow exponentially as a business in this industry, because they currently aren't providing any solutions for Amazon or other businesses that also do cloud computing and require, Avepoint services like cloud migration and virtualization and, management and data protection like Avepoint provides. And you can see right here in their description, it says that they have 5 million cloud users worldwide. But if you go to their website, you can actually see that at the moment they have 8 million cloud users. So they're actually growing very rapidly. And this is another reason why I think that they're positioned to essentially make a lot of money for their shareholders, not only in the short term, but also in the long term, because they're growing very rapidly. They're expanding globally. They're a Microsoft Gold partner. They haven't yet started providing solutions for Amazon Web Services. And at the moment, their share price is priced extremely low at $9.83. And as we saw earlier from the price targets for Avepoint, pretty much no matter how you look at it, whether you're looking at the low price target, the average price target, or the high price target, the way Avepoint is priced right now, they're definitely a buy, because no matter which one of those price targets is achieved, anyone who buys into Avepoint right now would essentially be making money if those price targets hold true. And so basically what I've gathered from, reading these reports is that, since they're an emerging growth company, they don't really have to apply the same accounting standards, which is a little bit disappointing as a shareholder, because as a shareholder, I want to be understanding the businesses that I'm investing in. But I do think that as Avepoint continues to grow, that they'll be forced to meet more professional accounting standards, and that their financial position as a business will become more readily available to shareholders like myself and others. And one thing that I do know is that if the CEO of Avepoint is buying a large number of shares in the business and strengthening their equity position in the business, that's an incredible sign as a shareholder, because like I said before, it shows that the interests of shareholders and of the leaders of the business are aligned. It's not like the CEO is getting paid a salary or something and that money is getting sucked out of the business, and that money isn't potentially going to be made for the shareholders, because just because a business grows, it doesn't necessarily mean that shareholders will always make money. But in the case of Avepoint, because the CEOs and the CFOs and the higher ups in the leadership are so heavily invested in the growth of the business, it gives me as a shareholder good peace of mind knowing that my money is going to be taken care of, because it's basically them taking care of their own money as well. And like I noted before, the analyst ratings are pretty attractive considering current price levels. Not to mention that the business is relatively unknown right now. There isn't much coverage about the business, even though it's in a really fast-paced growing market like the cloud computing market, and they're a Microsoft Gold partner, providing solutions to the second biggest business in the world behind Apple. So for the people who are getting into the business before it establishes its global footprint as an international brand, I think the rewards will be worth it in the long run. So that's basically it. Thanks for watching. Don't forget to leave a like.